Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.Exchange. Yesterday, I had a marriage function, so that's why I could not do a post-market report. But yesterday's rally was really surprising. The day before yesterday, the Nifty shot up only 250 points. Then followed by that yesterday, Nifty shot up 300 points. So that was really very surprising because yesterday the global cues were not really, that good. And, just two trading sessions, Nifty shooting up 550 points. So you may remember, and I told you, the last week of the expiry usually tend to be more volatile. So in fact, that is where the people can manipulate the market so easily, the call prices will be very cheap. They would have bought it. Then they would have pumped in a lot of money in cash market, so to make, like they might have paid like 1 or 2 rupees more to buy in the cash market, but corresponding profit in the options market would have been very huge. But although Nifty shot up 550 points in 2 days, it was not a straight up. It was very volatile. Yesterday also the Nifty shot up in the morning about 180 point, then came down 160 point, then again shot up 200 point, again fell 100 point, and all kinds of, huge volatility. At the end of the day, for the last 2 or 3 trading session, FAs were net sellers, DAs were net buyers, but their buy and sell figures are almost the same. So net institutional figure is 0, but still markets are rallying. So June series, some significant things. Number one, for most part of the series, it was like, consolidating between 24,500 and 25,200, and then finally broke out. And then the last 2 trading session alone, Nifty shot up more than 500 point. As I always say, once 25,200 is a resistance, once it is taken out decisively, so that 25,200, may become a support. So the expectation for this week is that, 25,200 will be the support. Resistance now, it's very difficult to say because, since we have broken all the levels, the next logical level is the last October all-time high, which is 26,300. Look at the option prices. July series 26,300 call option is trading at more than 100 rupees. So you can see that is a kind of bullishness that we are having. So when the markets are bullish, why to talk about resistance? So there is no resistance in bull market and there is no support in the bear market. So, but the option premiums are still very good. Even yesterday at closing level also, the 24,500 put option was trading at more than 10 rupees for the weekly series. So the conservative people, they may start selling that. Right? So even if markets break 25,000 or 25,200, 24,500 will surely be a very good support. In the June series, 3 times that level was broken intraday, but on a closing basis, it did not close below that. Meanwhile, US markets are looking very good. Yesterday night, US markets, S&P 500 closed very close to all-time high. But again, after the market closed, the futures are slightly higher, so indicating all-time high opening for today. And all these things are happening despite the tariff fear. So I always tell you one thing, never trust Trump. When the markets are at high, he may come and talk something and the market can suddenly fall. So that risk is always there. So in July series, number 1, it is a 5-week series. Number 2, corporate results will start coming in. So usually in a 5-week series, if corporate results are due, then markets, tend to be very volatile. So therefore, I always say the volatility index is very low. So, either you take a directional view or if you are taking a non-directional view, it is always better to have some buy options in your portfolio. So in fact, in my portfolio, I have some buy options. So that is why like my portfolio is a little bit safe. Otherwise, when the market went to 22,000, right, I sold 26,000 call. That imagine, how much loss will be there, because the Nifty shooting up 3,000, 4,000 point. you know of course I sold 19,000 put, 20,000 put, 21,000 put, 22,000 put. They all made profit, but still those profits may not be enough to cover the losses. So along the way I bought some call options, so the call option profit is compensating the loss for the selling. So sometimes you cannot be a pure option seller, so you have to try a combination of buy and sell, just like uh, calendar spread, and all those kind of things. So only the Bank Nifty has taken the market higher in the last few months, and last September end or October beginning, Bank Nifty all-time high was around 54,000. Now it is 57,000. Whereas look at the FMCG index, it is down nearly 20%. Look at the IT index, is about 15% down. Look at the oil and gas sector, down by about 10%. So, it's the game of only financials now. If other sectors join, then only the dhamaka will begin. Nifty can scale 26,300 very, very easily. Who knows, it can go to 27,000 also. Even if it go to 27,000, still somebody who entered the market last October at 26,000. So 26,000 to 27,000 is just only 4%. So, you buy something, after 1 year you are getting 4%. That is half of the bank FD return. So why I'm saying this, number one, the danger of entering the market at higher level. Okay. And number two, how much the potential the market has. Of course, that journey will not be in a straight line. So it may go up and down. So but clearly this market is a buy and dip market, not sell on rally market. So that is a piece of advice, a caution. So markets are at a high. Anytime profit booking can come, triggered by one tweet from Trump is enough to trigger the sell-off. So it is time to be cautious, but at the same time, have some buy options in your portfolio. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.